after a record-breaking 2021, which was all about unicorns, it will not be an understatement to say the hype tide receded in 2022. With fewer unicorns, fewer $100 million rounds, fewer leapfrogging valuation stories, this year has mostly been about the funding winter and the slippery ice upon which the growth and late-stage startups are skating on, or at least some of them. But if there's anyone who has stayed warm, kept the fire burning on the hearth, it's the early-stage startups. And as a result, when we look at the trajectory of investments in 2022, it's clear that there is one star investor this year, the early-stage investor. Seed-stage startups have raised a historic $1 billion in funding, and Series A funding has surged to $4.2 billion in 2022. That's 50% more than what was raised even in the record-setting year of 2021, this as per data from Venture Intelligence. What's more, the average deal size for these early rounds has gone up, which offers comfort when tightening belts is the call for what could be an 18-month minimum long, difficult fundraising period. Lower burn, sharper focus, leaner operations have turned early-stage startups and investors into darlings. The tide has turned. The unicorn builder Tiger Global, for instance, has made its first early-stage bet in India this year. At least 145 micro VC firms have been set up in India over the past 2 years. And as VCs rush to refill their coffers in 2022, there are at least $15 to $20 billion of dry powder, most dedicated to early-stage growth startups. There is a rush of new funds with special focus areas: climate tech, agri-tech, clean tech, health tech, and more. And as it is rightly said, problems that need to be solved don't go away in a bear market. Hello and welcome to Young Turks, India's longest-running show on startups and entrepreneurship. I'm Shireen Bhan. When we envisioned the special year-end show, Investor of the Year, it was clear that 2022 has been a year of the early-stage investor. And so joining me on the show today, Khare, partner at Lightspeed India Partners, Vaibhav Domkundwar, CEO and founder of Better Capital, and Hero Choudhary, managing partner at BEENEXT. Gentlemen, appreciate you joining us here on the program. Well, I guess something worked right in 2022, and I guess the work that you gentlemen have done is a reflection of what perhaps will be the silver lining through this very tumultuous period. But Dave, Vaibhav, and Hero, let me start by asking you what you made of the year gone by. Many argue that perhaps the biggest lesson that 2022 has taught entrepreneurs and venture capital investors is on the frugality of capital and the toxicity that excess capital can sometimes bring about. Dave, what would you take away as the big musings, the big lessons from 2022?
I think, well, thanks, Shireen, for having us on the show. I think maybe one way to frame it is that if you look at October, November, December 2020, if you recall, post the lockdown sort of being taken away a little bit, the market opened up, and then you take that period all the way through to Jan, Feb, March of 2022. Those were the sort of high funding quarters in India and elsewhere in the world as well. And so if you look at 2022, the first quarter was very different. Jan, Feb, March was very different from the rest of the year. The lessons I'd take away from it is that some of what you've already mentioned, but also that fundamentals matter. They've always mattered, but we sort of, I think the ecosystem took our eye off that ball for a little while. But also that innovation continues. We see a lot of new areas continuing to come up. This year, we've made investments in the climate tech space, the space tech space, agri-tech, believe it or not, in the Web3 infrastructure space, and a number of new areas. And so innovation continues to bubble. And as early stage investors, I think Hero and Vaibhav may say the same thing. We keep investing, and good companies get founded at all times.
Well, yes, that is in fact right. The eye should never be away from the fundamentals, but I guess we go through these cycles during the boom period when all boats are rising. It looks like there will never be a down cycle, and yet we forget the lessons from the past. But Vaibhav, I want to address that very same issue with you on the lessons that 2022 has taught us. And I was looking at your tweets, and I found one which was particularly interesting. You said founders looking for 2021 valuations will be disappointed. investors looking for 28 valuations will be disappointed too. So, Vaibhav, what does 2023 hold?
Yeah, so Shireen, look, I think I've lived through the dot-com bust and the financial crisis, right? So I know what it feels like, right? So I think I'm usually very positive, but I think like they've mentioned, I think we had gone far ahead of ourselves in terms of the 2021 valuations and what we expected and what we underwrote in terms of what some of these companies can become, right? So I think we were very negative. I think I was personally very negative from the beginning of the year. And I think the day Ukraine was invaded, I actually sent out a note to all our founders within 30 minutes, just saying that, look, I just don't like the way we might see this year pan out. And unfortunately, I think it went from bad to worse, right? So I think it's really more about, I think if you were to just put everything in a nutshell, it is really about the year of reset for the Indian founders and the ecosystem, I would say, wherein you really, I mean, kind of a hard reset, right? How you reset your iPhone, let's say, where you sort of wipe out the RAM, you forget what you were doing in 2021, because you really need to, and that's what I meant in those tweets as well, that we really need to understand where we are, what we can become, and sort of replan everything. So it was a year of reset for us in the portfolio. But at the same time, I think we are also at the highest founder quality that India has ever had. So we continue to invest through the year. And I think it is going to be very important for founders to remember the lessons, remember what it felt like. And I think a whole bunch of companies have replanned and reset in the correct way. So I think 2023 is going to be about, sort of building on that plan and building healthy growth that doesn't put profitability too far away, right? Because I think sustainability is far more important in the long run. And I think 2023, we will see that companies who essentially built that strong foundation with the reset will thrive. But, if you actually still had the house of cards kind of a situation, then we'll see a bunch of them crumbling. But I think overall, I think it's a net positive, and I think we're looking forward to 2023 very positively. I think we will end up with higher quality in the ecosystem overall.
Well, that certainly is the hope, that we will be left with healthier companies at the end of this hard reset that you speak of. And Hero, I want to understand from you, are you also witnessing this hard reset across your portfolio companies? Are people making those difficult choices at this point in time? Or are some founders still not getting the memo on the fact that the environment has changed?
Yeah, Shireen, first of all, thank you for having us. And just if you take a step back and just look at this year and you think how information revolution has shaped the world over last many, many years, it's an exponential phenomena. Over longer term, everything gets created in a very exponential way. So that being said, there are vintages, there are times when things get reset. And when you look at 2020, 2021, and 2022, it's one of those times when we are going through some of those resets. Yes, there are founders who have been focusing on building out profitable growth and profitable business model, but there are also founders who have been focusing on building out businesses with faster growth, especially if they have good amount of capital, have a very long runway, and they can win market share over this time. So we see both sides of the spectrum in the founders in the portfolio that we seeded many years ago. That being said, we think it's a really great time to be early stage investor, because founder quality has gone up a lot of noise has gone down, and we are really seeing phenomenal business models, great founders coming out. Early stage has always been and will be cycle agnostic, so we keep on investing through the cycles. And on the same philosophy as Dave and Vaibhav mentioned, we are busy in partnering with really great founders, building out businesses in climate tech, sustainability, Web3, fintech, insurance tech, and all the different verticals where we see great innovation happening.
Well, you're right in pointing out that founder quality, and that's something that we heard both from Dev as well as Vaibhav, has changed significantly, not just in terms of the ambition that these founders are willing to bring to the table, but also just in terms of execution as well. We have seen depth this time around in the last 10 years or so. But they've, two heroes point about the fact that early stage capital is cycle agnostic, and all three of you continue to believe in the power of innovation and the power of the Indian startup ecosystem to be relevant and address the issues that need to be addressed. From a future perspective, where are you likely to prioritize the use of your capital? What's looking exciting to you at this point in time? And in the existing portfolio companies, for instance, what is the guidance that you are giving out to founders today?
Yeah, I think to address your latter question first, in terms of guidance to founders, it's to not go out to market to raise in 2023, especially for growth stage companies. I think that market is still a bit locked up because founders raised at high valuations in 2021 and they raised plenty of capital. And so that valuation reset at the growth stage has yet to happen. So we are asking, our growth stage companies to, and even the early stage companies, to try and not raise and extend their capital well into 2024. I'm even hearing some of our companies have planned into 2025 now. So that's on that front. In terms of new areas, we will continue on a lot of the enterprise software type sectors, dev tools, infra, cross-border SaaS, healthcare IT. We made new investments in that area this year. In fact, this year has been more active for me than last year in terms of new investments. And then climate, B2B commerce, I think is very interesting. Areas of fintech and areas of content and gaming. We made several new fintech investments, for example, this year, including Razorpay, UB, and Acco on the insurtech side. So we're very excited about growth stage investments as well, and we're actively deploying from our global growth funds into that category as well, in addition to seed and Series A type companies. Healthcare IT, interesting area. Cross-border SaaS, we've talked about a lot. So all these areas keep bubbling along.
Yeah.
And the depth of talent continues to increase, as my colleagues have said already.